shipping has been front and center for you for your whole career. But for many of us, it really came into focus during the pandemic. We were talking about supply chain snarls, prices for shipping costs just absolutely skyrocketing. Do you think now where we are in 2024, would you call this a normalization of the industry?
Well, yes and no. I mean, that's actually a great point. Shipping came into focus during the pandemic, where suddenly people realized that they cannot get the products, goods, that they were used to in the supermarkets or, whatever they buy it from. So unfortunately, shipping came into play with all these disturbances, that happened globally. Yes, we have things stabilized since the pandemic a lot, but there's still a lot of disruption, and that is a result of the Red Sea. As you know, you have the Houthis, they're bombing ships all the time. You have the Russian invasion into Ukraine, and that has disrupted the European energy market a lot. So you still have a lot of disruptions. Panama Canal, that was a big disruptor because of the reduced rains and the water levels, is now coming back into normality, but you still have a lot of global disruptions, unfortunately, and it's going to continue to be like that for the immediate future, I believe.
Is that why we're seeing, just over the last few months, the cost of moving a shipping container increasing so much? I mean, we don't hear about that as much as we did during the supply chain snarl of the pandemic, but why are we seeing costs go up in recent months?
Well, that's a great question, and that happens mostly because of the Red Sea closure. I mean, when you cannot access Europe and you need more ships to take the commodities from, let's say, China.
But that's been happening, that's been more than a year, the Red Sea
It's
closure.
been a year, but that creates like a backlog. It's like the accordion effect. I mean, you don't notice it in the beginning, but, over a course of like because you have the stock, right? Things are being, stocked up in places, in warehouses. But once you have the real disruption, and disruptions last a bit longer than the year that you mentioned before, then it starts to bite. Okay. And unfortunately, we have conflicting interests. I mean, shipping freight rates usually go higher when you have disruptions. And I'm proud to say, I'm not so proud to say that, unfortunately, we want normality and we want things to be cheaper for the consumers. But, you always have something going on.
I also want to talk about stocks here. There's a number of dry bulk shipping stocks that have really done well over the last year. I'm looking at an ETF, the Breakwave Dry Bulk Shipping ETF, ticker BDRY. Over the last year, has returned over 110%. Does that momentum continue?
The answer is yes, and our stock, which is SHIP, is highly correlated to BDRY because we tend to follow the bigger ships of the dry bulk vessels. So what we do is that we transport raw materials from the production areas into the places where they turn into steel or aluminum. So we're very critical in the global logistics chain because, if you look at infrastructure globally, whether that is in the United States or Africa or Europe or the Middle East, you need steel. Steel is something that you cannot replace very easily. I mean, you can argue about oil and that's whether that's going to be replaced by natural gas and stuff, but steel is steel. It's kind of difficult to replace, a very critical component in infrastructure, right?
Stamatis, let's talk politics a little bit, because certainly front and center for us as we enter the final stretch of the presidential campaign. And I imagine you're watching it very closely, given that you hear a lot about tariffs, especially from former President Trump, who says he wants to bring back and increase tariffs on goods coming from certain countries. How do you look at this as from your position as CEO of a shipping company?
In order to have the tariffs make any sense, you need to have things produced in your country or in countries that are your allies. How do you put like steel tariffs when 56% of the global steel production comes from China? You don't see any blast furnace, production of steel, anything being built in Europe or the United States, right? It just doesn't happen. So the world still is highly reliant on the Chinese steel. So no matter how many steel tariffs you put on or EV tariffs, things will still find its way. You just make it more expensive for the consumers. I don't agree with tariffs so much. I mean, only when you have direct competition and only if there is any dumping takes place. But in this particular event, you don't produce steel here. It's a given production. You need additional steel, not just in the United States, but also in Europe. So it's going to find its way to the consumer. It's only going to be more expensive, and that's bad.
How do these tariffs help with congestion at all, or do they make that worse?
Well, congestion is mostly war-driven and weather-driven.
Yeah.
So tariffs do not create any, big congestion effect on anything. Congestion is always a problem in our trade because ships get congested in areas, and that creates a lot of backlog and makes things, again, more expensive. But it's mostly war-driven, like, Russia, Ukraine, and the Middle East, and weather-driven. When you have a typhoon or a cyclone or a hurricane or something, that creates congestion in areas.
You're the CEO of two publicly traded companies. From a shareholder perspective, how do you make sure that you're giving enough time to different companies?
Well, thank you. Both companies are quite similar. So the management company is consolidated into one that provides management services for both companies. And the investment philosophy of each company is completely different. Synergy, for example, owns a pure play fleet of Cape-size vessels.
Cape-size, remind everyone what that is.
Cape-size is the largest conventional ship that transports iron ore, coal, and bauxite. It's about 180,000 tons of cargo carrying capacity, and it's about 1,000 feet long. So it's like 300 yards. It's a big ship, and we have 20 of those. So we're quite big in what we do. So synergy is mostly buy and hold and generates a very significant return, and it's a cash flow thing that we distribute to our shareholders, and we have increased our dividends substantially. United Maritime is we buy, hold, and sell. So when we find the opportunity to buy an asset low, we buy it, we keep it, and then we sell it, and we usually, we have been very successful in creating some amazing profits in both companies.
Should note that Synergy shares this year, SHIP is the ticker, up about 34%, Emily.
That
Yes.
is outperforming broader
you.
markets and the S&P 500. In the lead up to the show, Tim said that we were going to discuss how ports are becoming pawns in geopolitics. Talk a little bit about that in the last couple minutes that we have.
Well, it's about infrastructure. I mean, there are not sufficient ports in the Western world to accommodate all these additional changes in energy. I mean, for example, Europe was reliant on the natural gas coming from Russia in the form of pipelines. That doesn't exist anymore. You need to create the infrastructure to bring in natural gas through the port facilities and make it distribute it into the households. How are you going to do that? I mean, the infrastructure was not in place. And people have been pushing the can down the road a lot in infrastructure because they were reliant on things that were like 30 or 50 years old, like these pipelines in Europe. And the same thing happens in the United States. People do not accommodate for that.
Very briefly, 1 minute left. Concerns about drought, especially with regard to the Panama Canal. We saw some issues there earlier this year. How are you thinking about that?
It has recovered a lot, so I'm not so concerned.
It's recovered a lot.
It's recovered a lot. I'm not so concerned about Panama. I'm concerned about the Red Sea. The Red Sea will continue to be critical, and it affects the United States a lot because you export a lot of coal to India, for example, from Baltimore. Now those ships need to go around the Cape of Good Hope. You need 20 to 30% more ships to do that. It's critical. So I'm more concerned about the Red Sea, both from a safety as well as the energy infrastructure.
Stamatis Tsantanis, Chairman and CEO of Synergy Maritime, and also the CEO of the publicly traded shipping company Maritime United, joining us here in the Bloomberg Interactive Brokers studio. Taking a look at the markets, we're off our lows of the day. The S&P 500 down 1.5%. The NASDAQ 100 right now down by 2.4%. Among the worst performers in the NASDAQ 100, Broadcom down close to 10%. Tesla down 7.4%. Supermicro down 6%. ASML down 5%. Speaking of the markets, coming up next, we're driving to the close. This is Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got the Dow, the S&P, NASDAQ 100 index deeply in the red on the week. The S&P on track for a loss of 4% or more. 20 minutes to go until that closing bell clangs. But right now, let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It's another tough day for stocks as the 8:30 a.m. payrolls data missed estimates. The Dow is currently down 407 points. S&P's dropped 93, and NASDAQ, that's lower by 2.4%. The U.S. 10-year yield at 3.71%. Gold is down 22 points. Oil is in the red, and Bitcoin, that's down by 4.3%. All of the main 11 S&P sectors are trading in the red, led by losses in tech and telecom. And leaders to the upside in the Dow, McDonald's and Travelers, while Amazon fell 3.1% and led to the downside. After earnings, Broadcom fell 10%, and in the tech space, Tesla fell 7%. Supermicro dropped by 6%. Wrapping things up, Intel fell as much as 3.9%, trading to its lowest level intraday since 2010. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. Donald Trump has won a delay to his sentencing in the New York hush money criminal case until after the November 5th presidential election, giving the Republican nominee a reprieve from a potential prison term weeks before voters go to the polls. The sentencing now takes place November 26th instead of September 18th as originally planned. Now, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, it's time for the drive to the close, and we're
Is it already
joined now.
that
Yes,
time?
it is 3:40, and this has been a brutal week in
Some
the
people
equity
might be
market.
saying, time to close the market.
Time to close. Let's shut it down.
Let's shut it down.
We're joined now by Lauren Sanfilippo in the Bloomberg Interactive Broker Studio, senior investment strategist for Merrill and Bank of America Private Bank. Help us understand what is going on in stocks right now, because we are poised for the worst week in the S&P 500 since the regional banking crisis in March of last year.
Yeah, let's close it out, right? I think that makes sense. The labor market, jobs report, I'm sure you guys have been talking about this all day, right? In our view, this is a cooling. This isn't a labor market that's really stalling out. I don't think much has fundamentally changed since the beginning of August. So that's important to note, right? It's just been a little bit of positioning, just what I'm seeing in semiconductors as the example, and tech's really selling off, taking it on the chin.
Is this what the Fed wants to see? I'm not talking about the market reaction, because we're told the Fed has a dual mandate, and that mandate doesn't include the equity market. But is this what the Fed wants to see when it comes to the labor market?
I think so, and I think this gives them more reason to cut by 25 basis points. That is our base case. I know those odds have been oscillating today between 25 and 50, but again, we're in that 25 basis point camp. I think the inflation print that's going to come out on the 18th, it's not time to call the all clear, I actually think, on inflation. And it was only, 2 months ago when we got an inflation print that actually triggered a massive rotation in markets.
Yeah, we're actually set to get CPI next week on the 11th, and that's set, according to economists surveyed by Bloomberg, 32 of them, 2.6% is what we, and again, it's not the preferred measure of inflation, Emily, but that's 2.6 is getting closer to 2.
Yeah, I mean, I'm wondering, when you think about the August that we had, there was some fear that sell-off was the beginning of a broader unwinding in markets. Do you agree with that framing, especially now that we're getting this data that the Fed kind of likes and kind of is pointing to more of a soft landing?
Right. I think all that data actually probably bolsters the case for a soft landing. We saw basically at the beginning, right, some chop around some mechanical yen carry trade for sure. It was a growth scare at best. And then I think we got a revised Q2 GDP report that told you actually the consumer was in better shape than initially thought. And a GDP for Q2 at 3%, that's very healthy. The Atlanta Fed GDP for Q3 now is saying 2%. I mean, again, this is a moderation in growth, but this is by no means a recession. And we think the Fed is embarking on a non-recessionary cutting cycle.
So, non-recessionary cutting cycle. You don't think we're in a recession or headed to a recession?
No, and I don't think that there's a lot of data out there to sort of suggest that, right? Particularly data that's leading and not lagging, like we saw today with the jobs market.
So then, where are you finding opportunities in this market?
So unfortunately, this takes a little extra legroom here, but I do think you have to look under the index, under sectors, right? It's tough to make broad sector calls in this environment. Like, for example, industrials would not be a sector right now that I would be recommending or overweighting, but I would still like the aerospace and defense industry, right? And I think there's a lot of legs there. So unfortunately, this is about quality. This is about earnings growers. In Q2, we saw, for earnings, we saw 5 out of 11 sectors growing their earnings by double digits. I mean, that's earnings, that's broadening. So I'm tracking earnings into Q3 to see sort of where we see opportunity.
Have clients been calling this week with the sell-off?
Yes, and then they tell you how much they have in cash because it's almost like a I told you so moment a little bit, right? I mean, there's a lot of uncertainty out there, and that's what I'm hearing from clients.
So they do have a lot of cash, and they're ready to jump on opportunities when they see the time is right. Do they feel like things are still too high right now?
Unfortunately, there are a lot of clients that think there's more to come on this like downside pullback, just given the confluence of issues that we have ahead of us, right?
Do you think there's more downside to come?
I think, we could definitely see more to this pullback. I mean, there's still the election cycle in front of us. We have a debate next week. And again, CPI, who knows what that's sort of going to bring. So, yeah, I do think that there could be more to this pullback.
Do you do anything particular in portfolios to prepare for the election? Because I think it was yesterday we were talking to Abigail Doolittle, who was pointing out that when you look at the VIX futures curve, which is getting into a little wonky territory, but it looked like traders were not really bracing for a lot of volatility around the election. And so that could be seen as maybe an underappreciated risk.
I mean, maybe we're pulling forward some of that uncertainty too. This has been an unusual election cycle, but when it comes to portfolios, I mean, we're thinking about corporate profits, so sort of that underlying strength. And that's really the North Star. Policies, we're not going to start positioning portfolios sort of around where we think candidates are going, but we are thinking about gridlock or not. And it's just the polling's just getting tighter, particularly in the swing states.
Gridlock or not is more important to you than who's in the White House?
Yeah, just in terms of what the market's looking for. I think the market would be more nervous about like a Republican or Democratic sweep.
Then the policies actually get done.
Correct, yeah.
Okay. Lauren, thanks so much for joining us.
Thank you.
Here in the studio, too. What a treat.
Nice
Always
to be
good
here.
to see you. Lauren Sanfilippo, Senior Investment Strategist for Merrill and Bank of America Private Bank. We do have a redhead crossing the Bloomberg terminal. Top aides to President Joe Biden have been crafting a proposal to create a sovereign wealth fund that would allow the U.S. to invest in national security interests, including technology, energy, and critical links in the supply chain. This according to a person familiar with the effort. The behind-the-scenes work by National Security Advisor Jake Sullivan and his deputy, Dalip Singh, mirrors, at least in spirit, a proposal that was floated yesterday by Republican presidential candidate Donald Trump, who called for a government-owned investment fund to finance a, quote, great national endeavors during a speech, Emily, at the Economic Club of New York.
This is something that we had talked about yesterday, of where would the money exactly come from, and it's also when the U.S. is facing such a large federal deficit, is it really the best idea policy-wise to start a sovereign wealth fund?
Yeah, if you look at other countries that have sovereign wealth funds, namely Norway, which is valued at over $1 trillion, they don't have the same type of budget deficit that the United States does. Singapore, another country with a sovereign wealth fund. You mentioned it. We were talking about it yesterday. That's because the idea of this U.S. sovereign wealth fund has some outside support. Hedge fund billionaire John Paulson said Thursday that he supported the U.S. building a pool that would surpass the $1.7 trillion Norway uses for investments.
When are we going to go back to talking about the $1 trillion coin?
Oh, don't know. That's a really good question. Coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage on radio, TV, YouTube, and on Bloomberg Originals. We're to count you down to the close. This is Bloomberg.
Listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Tim Stenevec and Emily Griffeo in for Carol Messer. You know what, Emily? Ever since I started doing this, we've referred to this time period when Carol goes on her vacation in September to the massive sell-off. And once again, she's going to come back, depending on what happens in the first couple days next week.
And there's a rebound.
I don't know. Could still be a sell-off. This has been a sell-off.
Historically, what happens when she comes back?
I don't know what happens when she comes back, but when she's gone in September, there's a sell-off.
You know, hedge funds pay millions of dollars every year for alternative data. So Carol will have to tell all these funds about her vacation plans and whether
they just
that's
got to listen to Bloomberg Business
trading
Week.
signal or not.
Hey, speaking of trading, we're off our worst levels of the day, but still down 1.7% on the S&P 500. Stocks headed toward their worst weekly sell-off since March of 2023. Bonds whipsawing. Disappointing report on the U.S. labor market, reviving concerns that the economy is cooling, and the Fed is moving too slow to rescue it.
Yeah, the bond market is pretty interesting today because we were discussing this earlier during the break. There's talk of a potential for a 50 basis point rate cut in September. But then when you look at what the swaps market on the WIRP function on the terminal is showing, traders are only pricing at about a 20% chance that we would get 50. The 25 is fully priced in. So why was there all panic this morning when people said, we don't need a 50, the data's not that bad?
Yeah.
There's been a lot going on today.
Yeah, that's true. So Wall Street bets on a half-point Fed reduction this month faded again after briefly gaining momentum when Fed Governor Chris Waller said he's, quote, open-minded about the potential for a bigger cut.
I think it was really those Waller comments.
Why though?
Because traders react to headlines, and then when you actually looked and read his comments, he didn't say, I'm ready for a 50 basis point cut. He said, oh, maybe if, I could be open to the potential. So I think that kind of explains
So
the
you think we would have had to see a
reaction.
bigger miss than 20,000 or so jobs to have a 50 basis point rate cut be really on the table?
Well, yeah, I guess. I'm not trading, but I would assume, that
23,000 payrolls short of forecast for the month of August.
Yeah, I guess that's not that much. Even the revisions
it depends on the number that investors were looking for, right?
Yes, but it only missed by 20, right?
Yeah.
And then the unemployment rate was steady, and even the unemployment rate was steady even as the labor participation rate was steady. Wage gains were still pretty solid. So overall, it wasn't exactly a report that was screaming a weakening labor market that would prompt an emergency Fed cut or a jumbo-sized rate cut. I think that's what the market is kind of figuring out today.
Well, you look at the S&P 500, and there's pretty much nowhere to hide in there today. You have communication services down 3%, consumer discretionary down 2.7%, information technology down 2.5%. Not even any green when it comes to real estate, down about 0.1%. Staples down 0.3%. Healthcare, Emily, down 0.4%.
Yeah, even the more speculative areas of the market that I think we were seeing some froth and some excitement earlier this week in buying, those are underperforming today. And that's typically a sign that, again, there's nowhere to hide. There's no appetite for risk. You look at the ARK ETF, ARKK, that's kind of a bellwether for speculative tech stocks, down 4.6%, a basket of the most shorted stocks in the market, tracked by Goldman Sachs, down 2%. Bitcoin down 4.5%.
I got a crazy one for you.
Okay.
GameStop?
Up.
Up.
Oh, really?
6%.
Okay,
Here's
well
why.
then my thesis is...
This is why.
I stand corrected.
No, because Roaring Kitty, he posted to X for the first time in a few months. What does it mean?
It never... what did he post?
I don't
Just
know.
like a...
I have to figure it out. I have to log in, I guess, to see it.
a picture of nothing. Yet it's
That's
time
what
to
happens. Cutting you down to the close in just a few minutes. Coming up next on Bloomberg TV and radio, we're going to be joined by our Bloomberg TV team for our cross-platform coverage. YouTube, Bloomberg Originals, radio. Bloomberg's The Closing Bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you to the closing bell. A global simulcast starting right now. Scarlett Fu in the TV studio. Tim Stenovic in the radio booth. Emily Grafeo by his side in place of Carol Masser as we welcome our audiences across all of our Bloomberg platforms, including our partnership with YouTube. As stocks right now, Tim Stenovic, retesting those session lows. The S&P down 1.7% on the day.
Yeah, set for the worst week, going all the way back to March of 2023 when we saw that regional banking crisis. I mean, in the S&P 500, Broadcom, Tesla, Supermicro, just dragging down the S&P 500.
And tech doing even worse here. The NASDAQ 100 down 2.7%. There was really nowhere to hide. That safe haven trade in tech stocks is just not working today.
You know what's performing a little bit better in that it's not down as much? The Dow Industrials on a day in which volume is a very healthy 19% above the 20-day average.
Yeah, and also if I just look at small caps for a second, like they're definitely down, but just by 1.8%, so definitely performing better, say, than tech.
Yeah, and we were just talking with John Kolovis about some of those technical levels, the retesting of some of those key moving averages, where the next line of support is here. And you wonder, is this going to be a move, meaning heading into next week, that is going to be technical driven, fundamental driven, or macro driven?
I think the answer to that's yes. I think you have to put all three of those together, right? You get the CPI, which is going to be macro. We're obviously going to be looking at the debate. And then in terms of the micro, I don't know what we have, right? Earnings are going to be in a stall point, so that's going to be a little difficult to get a better read.
Yeah, the stocks right now down about 4.5%. Your two-year yield down about 8 basis points here, and your VIX elevated here on the day right around 22. Let's walk you through the numbers here in New York as we get the closing bells with the Dow Jones Industrial Average closing out the day down by 1 percentage point, roughly about 400 points. And believe it or not, that's actually your outperformer on the day. On a weekly basis, it's down about 2%. The S&P 500, though, having an awful day, 1.7% lower than when it started the day, more than 3% lower than where it started the week. The NASDAQ Composite down about 2.5% on the day, 4.7% on the week. And let's take a look at that Russell 2000, which is going to close lower by about 1.9%.
In the S&P 500, you had more than four out of every 5 stocks lower on the day today. 418 moved lower, only 82 ended up moving higher, Scarlett.
All right, let's take a look at IMAP. It should be a pretty easy read today. There's lots and lots of red. There are little slivers of green there, and why don't I tell you the biggest decliners first, right? You've got certainly the tech sector, whether it's technology, whether it's communication services, whether it's consumer discretionary, all of those are down at least 2%. Now, the ones that are kind of outperforming by just a hair, consumer durables and apparel ever so slightly, real estate investment trusts, a little bit of green, but this is a pretty broad retreat, everyone.
All right, well, it did manage to find some gainers today. It was not easy. I do want to start with U.S. Steel, ticker X, up more than 4% today. This after Cleveland-Cliffs CEO said that he's absolutely in the market for his rivals' assets. He told CNBC that he's working with investment banks J.P. Morgan, Chase, and Wells Fargo on a plan. He made these comments yesterday after the market was closed. Shares of U.S. Steel moving higher today. U.S. Steel, Cleveland-Cliffs, and J.P. Morgan didn't immediately respond to a request for comment from Bloomberg. Wells Fargo declined to comment. Remember, it was just Wednesday of this week when President Joe Biden said that he was said to be preparing to block the Nippon Steel deal. Also, how about a little bowling, everyone?
Okay.
B-O-W-L. Bolero, they got more than 350 locations in the U.S., Canada, and Mexico. The company reported revenue for the fourth quarter that came in above the average analyst estimates. Shares higher today by more than 6%. And this is a really interesting one on a day when speculative corners of the market are not doing so well. GameStop actually rose today. Shares higher. This after the man known as Roaring Kitty posted to X for the first time in a few months. Shares higher by close to 7% today. What happened? Shares up more than 30% so far this year. The company is going to report earnings after the bell on Tuesday.
That'll definitely be an interesting one to watch if they have many earnings to report, Tim.
If they have any earnings to report.
I was going to say, what
I
earnings?
should say
Not
they're reporting
sure.
results after
right,
the bell.
Right, their
on
losses.
Tuesday.
I'm looking at the decliners. No surprise that those semi stocks getting hit really on the week, but also today, Broadcom down about 10% after the chipmaker gave a revenue forecast that was seen as disappointing, extending losses after their earnings miss that came after the bell yesterday. They see revenue at about $14 billion versus estimates of $14.13 billion. I think really underscoring just how high the bar is for these chip names after the rally we've seen all year. In Broadcom today, trading volume was quadruple the average for around this time of day. I'm also looking at Super Microcomputer, those shares down as much as 7.6%. JP Morgan downgraded the server company to neutral from overweight. And of course, the move comes in the wake of a delayed 10K filing for the company. The company said it needed more time to assess its internal controls. And then finally, I'm looking at Elf Beauty. Couldn't really find what was driving the stock lower, at least today, but earlier this week, we got some Nielsen-tracked channel point of sales data for the makeup company. An analyst called out weaker than ideal 4-week acceleration, and they called out a deceleration in the 2-year growth performance. That stock down 18% on the week and down about 10% today with the broader market falling.
This is really all flying in face of my invest in your face thing when these companies report and they are struggling or there's some negative press around them. Okay, let's get to the bond market here. There was buying pretty much across the curve, a teeny tiny bit of selling, and I mean tiny, in the back end. But the front end, look, down by 8 basis points. You're taking a look at the 210 curve closing on inverting for the first time since July 1st, 2022. You're looking at about a 5 basis point difference. Might not seem like a big deal, guys, but the speed with which we re-rated in the last couple of days feels very tremendous.
Yeah, and that was a great point that I think John Kolovis made as well here about kind of the speed of the descent here. And there are going to be a lot of superlatives on this day, of course, that we're crunching those numbers now. But it gets to this idea here that what is there to save this market? Earnings season is over. The Fed is going, thankfully, into a quiet period. And now you basically just have the markets left to their own devices.
Okay, well, let's talk a little bit more about these markets. Look at the SOX this week, having its worst day going all the way back, or worst week rather, going all the way back to March of 2020. Certainly NVIDIA and Broadcom, a big part of that. But if you look at the SOX today, guys, every single component of the 30 stocks that are in the SOX down today, down another 4.5% today. What's the message that that investors are sending with selling semiconductors?
Are you going to buy one of these Apple iPhones? I hear they have this big announcement coming up next week. And,
and
it's supposed to be AI enabled, though not quite AI enabled.
I'm not get more thumbs up things to do your FaceTime.
I don't think you need a new iPhone for that.
I don't?
No.
I heard the iPhone 17 will be a bigger deal than the iPhone 16. So if we're going to hold off,
we're already on the iPhone 17 super cycle now.
So is that next year then?
Yeah, that's not even 2020.
Have we talked about this though? I mean, you guys are raising a really good point, which is the idea that the upgrade cycle has gotten a lot longer for people.
Yeah.
And this makes up 50%, roughly half of Apple's revenue. And it's a really important, it's a crucial device for the company. But if they don't offer something that, prompts people to upgrade, then people are going to wait for longer to upgrade.
And it's also part of the Broadcom supply chain. As we were talking about earlier, Tim, Broadcom is a big supplier for chips for Apple.
I feel like you just need to invest in the you break it, I fix it, like whatever Apple repair company is a better bet than the Apple repair.
Won't you get sued for that or something? Don't Apple come after you?
No, but if now, everyone's past their manufacturer warranty anyway, so because we're all holding on to them for years and years. There's a great story today written by Elena Pang about how the way that we're eating is totally changing. Americans' love of cheese has drawn $4 billion into new factories. We keep talking about this manufacturing recession, not when it comes to building factories.
Whoa. What the heck is that?
That's
cheese, everyone.
Okay,
that's what we eat?
Let's just get an idea. Who likes the cheese? I love the cheese. Romaine does not like the cheese.
No, I don't.
Scarlett?
Particularly after seeing that video. I never want to know how the sausage is made or the cheese.
Tim?
We have a great cheese shop close to where we live.
Yeah, well, we're part Slopey people, so
Fancy
that's it.
man,
Emily,
those
are you a
cheese
cheese
shops.
person?
I haven't met a cheese that I don't have an appetite to try. I would pretty much try anything.
I'm wondering how much 4 of the 5 of us are responsible for the $4 billion in new factories.
Wonderful.
That dairy processors are planning across the U.S. to
$4 billion worth of this stuff gets sold. Is that what you're telling me?
$4 billion to put into new factories to feed us the cheese that
and they
apparently
just pump it out through a little hose there.
I don't know.
So
do they clean that hose after every pump?
Yes, they clean the hose.
No cheese.
All very sanitary.
No cheese whiz. No cheese whiz for Romaine.
We like the mold. The mold is good.
Right.
What?
It's aged.
I'm so not into cheese.
Oh gosh, Alex.
All right, I'm told we have to go. Happy Friday, everyone. Eat some cheese.
Which part was the mold? Was it the white part or the?
That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We're headed back to radio and YouTube. Alex is heading out to start the weekend. Scarlett and Romaine are going to continue on TV. We'll see you same time, same place on Monday.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenevec. That is Emily Griffeo in for Carol Masser. You're not back with us next week.
I'm not.
You're not.
At the moment.
You're
but
not
the
at the
week
moment.
after that, I will be back.
All right.
So
gone, but not for long.
exactly.
All right. Well, thanks for filling in this week. It's been great. We got another hour coming up. You may remember back in July, the day that President Joe Biden said he would no longer run for president, some of America's most prominent black women across politics, business, and entertainment joined thousands of their peers to galvanize support for Vice President Kamala Harris. They raised $1.5 million in just 3 hours. Check this out. about 44,000 black women, including Representative Maxine Waters of California, other lawmakers, including Joyce Beatty and Jasmine Crockett, talked of rallying behind Harris for the U.S. presidential election case against Donald Trump, presidential election against Donald Trump this November. It was an incredible outpouring of a number of people in a very short period of time. I think a lot of people were surprised, but I would guess that our next guest is not so surprised. Dr. Carrie Mitchell-Brown is a cultural architect and equity strategist. She joins us here in the Bloomberg Interactive Brokers studio. Good to see you, Doctor. Thanks for joining us today. Before we get to the phenomenon that we see playing out across the country and that you've been studying for years, talk a little bit about what cultural architect and equity strategist means.
First of all, it is a pleasure being here. Thank you so much. A cultural architect and equity strategist. I go into organizations and try to make them better, right? Looking at their culture. So it's not just about changing the people who are sitting at the table, it's changing policies, making sure that people feel like they belong, making sure that everyone's contributions are valued regardless as to where they work at in the organization, how long that they're being there, and more importantly, that there are high levels of respect.
The reason I brought up what happened on that one day in late July, that Sunday, is because you argue that there's this emerging power shift to black women and women in general that you've observed.
Yes, there is. It has been for some time, but the world has seen it operationalized. Often in our space as equity practitioners, we hear that you have to give up something in order for other people to have space. Inclusive leadership looks exactly like what happened there. Joe Biden made an assessment that what's required right now he could not provide in his leadership, so he transferred his leadership to a very capable black woman who has been in the trenches and demonstrated that she has a lived experience to lead in this moment and beyond. And that's what is required. And he did that very, very well. There were a number of people who supported and rallied behind him, but he did it very well, and it came off as very powerful and very transformative, and others can take up that practice in moving when their leadership no longer meets the moment.
What is the next phase of this power shift towards women? I guess, how do we keep this momentum going? Because now we do have, a black woman kind of front and center stage. How do we kind of keep that continuing?
Yeah, I mean, it is a sign for businesses. It does really highlight that equity is necessary in all of our institutions and all of our workforces. Ketanji Jackson Brown, I mean, she's at the pinnacle in her career as well.
Supreme Court Justice.
Supreme Court Justice, absolutely. We saw a lot of that happening when she was finally confirmed, as well. It is very, very important for these leaders to represent our democracy, to represent and reflect what our country looks like.
I want to go back to Vice President Kamala Harris, because one thing that we've seen her do, or one thing we've seen her not do, is make her racial identity part of her pitch to the American people, which I think is really interesting.
Yeah.
She's not making that front and center with the campaign. Certainly, former President Trump did that about 4 or 5 weeks ago at that event in Chicago.
Right.
But she has not made that a big part of her campaign.
No, she has not made that a big part of her campaign, and it's not her only identity either. She's American, she's a woman, she is multiracial, and, she is representing. When she accepted her nomination speech, she represents all people, and she talked about doing that for her entire career, of the people. Right? And most women who lead organizations, who lead corporations, who lead labor unions, who lead think tanks, they don't lead as, I'm a black woman president, I'm a black woman leader. We have two women currently who are black that lead Fortune 500 companies. They don't lead with, I am a black woman CEO. No, I am the CEO of the company.
That's a tiny number.
It's so tiny. So tiny.
That is not representative of.
It is not
the US
representative of
population.
the U.S. population at all. There's a lot of work that needs to be done there. But my example is still the same, that they don't lead with, I am a black woman leader. I am a leader. A proven leader.
So what groups do you target in your work as a cultural architect and equity strategist? Do you kind of focus on people early in their careers and advancing them, or is this more kind of targeting people in the mid and more senior levels?
I really work with organizations who are committed to ensuring that they have the right environment for black women to thrive, for everyone to thrive, but particularly for black women to thrive. So if there's an organization who has an experience that they're not able to retain talented black women, well, we have a conversation to see what's going wrong, because it's not the black women who are leaving who are the challenge. What's happening in the environment, what's happening in the workplace, what's happening in the cultures, the policies, the practices that create the conditions where black women do not want to stay.
What are the challenges that these leaders are coming to you with when they hire you, when they bring you in to do this work? What are the problems they're trying to solve?
The problems that they are trying to solve is they're trying to operationalize their commitments for racial equity, their commitments that they are making for diversity. We all know that companies with diverse teams are 35% more productive in revenue, in impact, in the bottom line overall than companies whose teams are not diverse.
Okay, so I want to bring this up because in recent months we've seen Lowe's, Harley-Davidson, Tractor Supply, Deere, Brown-Forman all come out and say they're pulling back from pledges to commit to diversity, equity, and inclusion programs. There's a real pushback to DEI right now.
There is a tremendous pushback to DE&I right now, and one would think, were they committed in the first place? After George Floyd, 2020, there was a lot of commitments. No company wanted to be on the wrong side of, I'm not going to commit to this. We saw a lot of companies pulling back with the Supreme Court rulings coming out of the Fearless Fund, and the risk of litigation. We have witnessed some organizations softening their language around their commitments on their website, but continuing to move forward, with their programming, changing the words, and changing the actions. They're two separate things. But I would question, were they serious about it in the first place?
10 seconds, permanent shift, is this it? Or these companies circle back in the coming years?
They need to circle back. It's at their own peril if they don't.
All right. Dr. Carrie Mitchell-Brown, thanks so much for joining us.
Thank
Cultural
you.
architect and equity strategist joining us here in the Bloomberg Interactive Brokers studio. The S&P 500 today closed down by 1.7%. The Dow was down 1%. The NASDAQ 100 was down today by 2.7%. The biggest weights on the NASDAQ included Broadcom, NVIDIA, Tesla, Amazon, Meta, and more. This is Bloomberg Business Week on Bloomberg Radio, TV, and YouTube.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Wall Street coming off of a brutal week, at least for the bulls, with the S&P 500 index on the week slumping by 4.25%. In fact, it was the worst week since March of 2023. Bonds whipsawed as another disappointing jobs report revived concerns that the economy is cooling and the Fed is moving too slowly to rescue it. S&P down 95 points today, a drop of 1.7%. The Dow down 410, a decline of 1%, while NASDAQ was down 2.5% today. NASDAQ tumbled 436 points. 10-year yield 3.72%. The 2-year 3.66% on the 2-year. Spot gold down $21 the ounce to $24.95, down 0.8%. And West Texas Intermediate crude down 1.5%, $68.11 for a barrel of WTI. Bottom line, though, on the week, S&P 500 index down 4.2%. Bolero rallied today after the operator of bowling centers reported revenue for the fourth quarter that came in above the average analyst estimates. Shares today advanced by 6.6%. And Apple's most important event of the year takes place Monday, when the company will roll out its latest iPhones and set the stage for a new artificial intelligence platform. Sources tell Bloomberg top aides to President Biden have been crafting a proposal to create a sovereign wealth fund that would allow the U.S. to invest in national security interests, including technology, energy, and critical links in the supply chain. Again, this according to a source. Recapping stocks lower, S&P today down 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Well, she's a woman of the world, and God, she knows it.
Well, women and non-binary venture investors have gained a foothold in the tech industry 5 years faster than the advocacy group Allraise expected. But leaders say a national backlash to DEI initiatives threatens the progress that has been made. Check out these numbers, Emily. About 18% of decision makers at U.S. venture capital firms are female. It's double from 2018, when Allraise was founded and set a goal of reaching that number by 2028. That's according to the group's annual report. It was published just a couple of months ago, back in July. Very curious what Sarah Dusek has to say about all this. She's co-founder of Enigma Ventures. She's got a new book just out this week. It's called Thinking Bigger. It's a pitch deck formula for women who want to change the world. Sarah joins us from Cape Town, South Africa. I should note, she's a founder who founded the company Under Canvas, which was sold for more than $100 million. And she's also behind the Few and Far collection. Sarah, good to have you with us. How are you?
I'm very well. Thanks for having me.
You know, it's interesting because we spend a lot of time talking about the small portion of VC funding that goes to women and how it hasn't improved that much in recent years. But we are starting to see, at least here in the U.S., and again, important to know, this is from a U.S. perspective. You're joining us from Cape Town. It does seem like at least decision-making or decision-makers have become more representative, at least on a gender level here in the U.S., than some organizations thought they would. What do you make of that?
Yeah, I mean, we have seen the rise, a large rise of female fund managers over the last few years. But still, when you look at the size of funds that female fund managers are able to raise, they're still minuscule in comparison with many of their male counterparts. And that's still a problem, because obviously the amount of capital that women can deploy then influences who is getting that capital. And what we know is that still only 2% of female founders are getting venture capital in the US.
What do you make of that divergence? Is there anything that kind of explains that really large gap between who gets funding and who doesn't?
Well, venture capital historically has been a big boys club, right? So if men are typically doing the investing, then inherently we invest in people. All of us are prone to invest in things that we like, things that we can understand, things that we can connect with, people that we can connect with. We're prone to want to invest in people like us. And so if only men are doing the investing, we're likely to see a lot more men getting investment than women. And largely, women have been left behind of the conversation about what it takes to be investable. And if you think historically, it was 1988 that women could have a bank loan, a business bank loan for the first time.
Hold on.
That's not long ago.
Wait, is that in the US?
Yes. It was 1988 when a woman could have a bank loan for her business in the US that did not have to be countersigned by her partner or husband, a male counterpart of some kind.
Wait, Emily, go ahead, Emily.
No, I was just saying, that's really surprising.
Horrified as I am. I mean,
Yeah.
it's like, that's
We
pretty
both
crazy.
weren't even alive, right, Tim?
Rude. I was alive then. You weren't. She always tries
But that's
to
part of our history, and that's part of the gap that we've got. That it's been more challenging for women to grow and scale businesses, and largely women have not been in the loop about what investable looks like. And that was part of the reason for writing the book, was to demystify the capital stack, demystify what it takes to be investable, because we also know that only 2% of women ever build businesses that do more than $1 million in revenue every year. So we've got a chicken and egg scenario there. We don't have enough women at the funding table, which we know is improving slowly, but the amount of access to capital that even those female fund managers have is minuscule. But we also know that women are not building the kind of businesses that could be investable. So, but of course, you need capital to build the kind of business that could be investable. So
yeah,
we've
go
got
ahead.
this vicious circle.
Well, talk about the vicious circle, because in your book, you start out the book by writing about what the heart of the problem is. What is the heart of the problem?
The heart of the problem is not enough women are building big businesses. They're not thinking big enough about building the kind of businesses that could be investable. And we're not understanding what big looks like. And, from a venture capital perspective, we're talking about 100 million big. That's floor for thinking about a venture backable business. Could the business that you are building one day, not tomorrow, not 5 weeks from now, but one day potentially be worth $100 million or more? And that's what we've got to sort of help women understand. What does that look like? How could you build a business that has that kind of potential? And that's not just tech businesses.
Yeah, so
We
give
can
us
build
your story from early on in your career, when it came to your idea with relation to what you did in Montana.
Yeah. My husband and I built a company called Under Canvas, which today is still the leading and largest glamping company in the United States. And we did not build a tech company, but we did build a company that became worth well over $100 million. And when I started my company, I had no idea what venture capital was. I didn't really have a lot of concepts that, if you were going to build a business, that maybe you might need some investment or that you would need investors to come alongside you and build it. And I was very green and very not clear about what that looked like. But I had a business that had the potential to scale. And I could see the reality of what we were building, and the demand for what we were creating was there. But I had to learn the hard way about venture capital, raising money, and there were so many things I didn't know. And I thought that was me. I thought I was the only one who didn't know all these things and didn't know the venture speak and didn't know all the acronyms and didn't know the language. But since becoming a VC myself, I now know that most women don't know the language, don't know the acronyms, don't know what investable looks like. And so that was part of the reason for writing this book, is how do we demystify it? How do we make it easier for women to build the kind of businesses that are investable? And how do we help women understand this is the scale, this is what it takes, this is what it looks like? Because if you know what the exam questions are, you have a much better chance of passing the test.
You talk about the pitch deck. How important is that stage of the process for, a founder kind of starting out? How crucial is it that they get that pitch deck right?
pitch deck's everything because it's like your calling card. It's the 10 pages of information that give the headlines about your business. And it's the first impression that you will give anyone about your business and about you, especially when you're pitching investors. But the wonderful thing about the pitch deck and working on your pitch deck is that it's not only relevant for going out to raise capital. It's also really relevant for helping you work on your business and helping you think about what are the building blocks of scale. And so the book unpacks the pitch deck to be able to help you write a fantastic pitch deck to go out and raise money. But it's also designed to help you think about what are the fundamentals of scale that will really help me grow and escalate my business.
Well, I love that the book is filled with stories about your own experience as an entrepreneur. And I'm going to ask you to share a few of them. One of them from, I believe, back in 2010, when an event producer called you and your husband to make an order for tents that you didn't necessarily have, but you saw it as an opportunity to sell these tents. Explain what happened.
Yeah, that was a really pivotal moment in our business journey. We were in the very, very early days of the business, and we received a call from an event producer that said, I love your tents, I love what you're doing, and I'm doing a music festival in New York, and I would love you to provide the tents for the business. And of course, we did not have 150 tents, which was what they were asking us for. But it was a moment in time where we knew this could be a game changer for us. We have to say yes, and then we have to figure out how on earth we're going to pull that off. And so we said yes. We said, well, you can get those tents from us. We will help you put on your music festival, and off we went. But it was a nerve-wracking ride. I was pregnant with my second child at the time, and we asked the producer, when is the actual event? And it was the same week as my due date with our child. And my husband and I looked at each other and said, well, we still got to do it. We still got to find a way to pull this off and make this happen. And that contract that we won was a complete game changer for our business.
Sarah, sit tight. Sit tight. We're going to do some news, and then we're going to come back with Sarah Dusick, co-founder of Enigma Ventures. She's got a new book out. It's called Thinking Bigger, a pitch deck formula for women who want to change the world. She's also the founder of Under Canvas, which was sold for more than $100 million. Do you want to get to a headline crossing the Bloomberg terminal? The discount home goods retailer Big Lots is preparing to file for bankruptcy as soon as Sunday and plans to sell its chain of stores via a court-supervised process. This according to people familiar with the plans. The company will continue to operate under Chapter 11 protection, the people said, and is in the process of lining up a so-called stalking horse bid, meaning it's subject to better offers should any materialize. The company's been working with Alex Partners and Guggenheim Partners on the bankruptcy and sale process. For more, head over to Bloomberg.com and on the Bloomberg terminal as well. This is Business Week.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. It is on to the weekend, and we are coming off of the worst week since March of 2023 for the S&P 500 index. This week, the index dropped 4.2%. Bonds whipsawed as another disappointing jobs report revived concerns that the economy is cooling, and the Federal Reserve is moving too slow to rescue it. S&P 500 index today down 95 points, finishing the week, heading into the weekend, 5408, a drop today of 1.7%. The Dow down 410 points, a decline of 1%. NASDAQ down 436 points, a drop of 2.5%. 10-year at 3.71%, the 2-year 3.65%. Gold down $20 the ounce to $24.96, a drop of 0.8%, while West Texas Intermediate crude oil today was down 1.5%, finishing the week just above $68 a barrel. Jobs Friday. Lauren Sanfilippo is Senior Investment Strategist for Merrill and Bank of America Private Bank, and she was a guest earlier today right here on Bloomberg Business Week.
In our view, this is a cooling. This isn't a labor market that's really stalling out. I don't think much has fundamentally changed since the beginning of August. So that's important to note, right? It's just been a little bit of positioning. Just what I'm seeing in semiconductors is the example, and tech's really selling off, taking on the chin.
Lauren Sanfilippo with Bank of America Private Bank. Broadcom lower today after the chipmaker gave a revenue forecast that's seen as disappointing. Other chip stocks down in sympathy. Broadcom down 10.4%. NVIDIA down 4.1%. Advanced Micro Devices today was lower by 3.6%. Sources tell Bloomberg the discount home goods retailer Big Lots is preparing to file for bankruptcy as soon as Sunday. Also, sources tell Bloomberg top aides to President Biden have been crafting a proposal to create a sovereign wealth fund that would allow the U.S. to invest in national security interests, including technology, energy, and critical links in the supply chain. Recapping, S&P down today by 1.7%. Now, for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. I want to get right back to Sarah Dusek, co-founder of Enigma Venture. She joins us from Cape Town, South Africa. She's got a new book out. It's called Thinking Bigger, a pitch deck formula for women who want to change the world. She also founded and was CEO of Under Canvas, which was sold a few years ago for more than $100 million. Sarah, I want to start or continue the interview with you by hearing more about your story, because you started your career not as an entrepreneur, but as an aid worker, and found yourself after a few years burnt out with that. Tell us a little more about how you started your career.
Yeah, I was always very keen on saving the world, and I really believed I could. And I spent the first 8 years of my career, as you said, working for NGOs, because I believed that non-profit vehicles were the only vehicles that could do good. But now I know different. And after 8 years of hard grind and not making enough of a dent in any of the problems that we were trying to solve, I went back to the drawing board, burnt out, and thought there has to be another way. There has to be a different way to solve some of the world's biggest problems. And what I realized was that the vehicle that is designed to solve problems is actually business. The very heart of doing business is about solving a specific problem for a specific user that has to be sustainable because it has to make money. Otherwise, it's not going to exist very long. So, which really, really revolutionized my thinking around, could business be a vehicle for driving change, solving problems, doing good, moving us forward one step at a time, which launched my career into business, because I realized, well, if I believe that, then I should get in the ring and I should figure out, is it possible to do good? Is it possible to use business as a vehicle for moving the world forward?
It seems like you have a really good kind of positive mindset. And even the title of the book, Thinking Bigger, kind of has to do with this idea that if you put your mind to something, you can achieve it. Without spoiling the book, I'm wondering, what kind of tactics do you give to aspiring women entrepreneurs about really changing that mindset and pivoting the mindset towards one that is focused on being successful and being confident?
Yeah, one of the things I've realized over the last few years of working directly with female entrepreneurs and understanding myself also was there was two critical components missing for women: lack of knowledge, and therefore we are disempowered, about how the capital markets work and how you raise capital and the building blocks of building scale, but also the mindsets that we carry around with ourselves that actually are really huge stumbling blocks, from scarcity to playing it small to risk aversion. I mean, there are dozens. And so I started to unpack them as I tell my story through the book, because I could see many of them as a reality for myself that were sort of being a glass ceiling for me and were hindering my growth and what I was capable of. And as I've worked for other female entrepreneurs, I can see so many of the same mindsets coming to the fore that trip them up. And women typically want to play it safer. We typically are a little bit more risk averse. Obviously, that's a big generalization. But I started to see some trends. And that made me realize those are as big of a problem as lack of knowledge or lack of access to markets. And those we can do something about, right? We might not be able to change the capital markets overnight, but we can change the way we think. We can change the way we approach risk. And we can start to see a lot more clearly some of the things that are getting in our way.
What's the most underrated piece of advice that you would give to female founders?
Trust yourself more. I have never gone wrong when I've bet on myself. And often what we're not seeing is women believing in themselves enough. And we see that by how willing all in they are to be or not. You know, you really have to be all in. If you are going to grow and scale a business from $0 to $100 million in value, you have to be all in. There is no two ways about that. And often we see, you know, we're wanting to play it safe. We're wanting to hedge our bets. And really, you have to believe in you. And often, you know, we go out to raise capital and we expect other people to believe in us, because that's what you're asking people to do when you're asking for their investment. But we have to believe in us first. And if you can do that, you are on your way.
Sarah, just in the last couple of minutes we have, I want to look forward with you and help us understand what you're working on now. Few and far, it's not an agency, but it's a luxury experiences company. Explain what you're doing.
Yeah, I love being an entrepreneur and I love the travel space. So here we are again building another travel / climate company. And what we're trying to do this time is not just build a sustainable business. Under Canvas is an extraordinary sustainable travel business. Now we're trying to build a regenerative travel business. And the difference is the investment we make in the planet. So the business exists so that we can impact and regenerate, rewild, reforest the planet. So that's the heart of what we're doing. We're taking people on extraordinary carbon negative adventures around the world, taking them to some of the most incredible wilderness destinations. And we're also deeply investing in decarbonization by rewilding, restoring thousands and thousands and thousands of hectares currently in Southern Africa that will capture our nemesis, carbon, and capture it in the soil and play a role in hoping to save our planet.
You're talking about experiences throughout the world: Africa, Europe, South America, North America, Antarctica, everywhere. Really cool stuff. Hey, Sarah, thanks so much for joining us on Bloomberg Business Week. Sarah Dusek is the co-founder of Enigma Ventures. Her new book, out this week, it's called Thinking Bigger, a pitch deck formula for women who want to change the world. Her new venture, Few and Far, is up now, and she is the founder and former CEO of Under Canvas, which a few years ago was sold for more than $100 million. Taking a look at how markets closed today, the Dow down 1%, the S&P 500 down 1.7%, the NASDAQ down 2.5%. Cheese is next.
This is Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio and Television.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Emily Graffeo in for Carol Massar on this Friday afternoon. Emily, pop quiz. Is there such a thing as too much cheese?
No, not if you work at Bloomberg. We get a little piece of cheese every morning.
Or 2 or 3 or 4 if you're me.
You can take as many as you want, I guess.
Sometimes require multiple trips so people don't see you taking that much in one fell swoop. The reason we're talking about this is because Americans' love of cheese is drawing $4 billion for new factories. Eilina Pang is Bloomberg News commodities reporter. She joins us here in the Bloomberg Interactive Broker Studio. This story is just blowing up. Everybody's talking about how much cheese we're eating and how much companies are spending to produce more cheese. You're a commodities reporter. How did this story come about?
Yeah, I started covering the dairy industry earlier this year, and I was asking about a lot of the dynamics going on, and people were just saying people are eating their dairy. People aren't drinking their dairy. And as a consumer, that made a lot of sense to me because I can't remember the last time I had like a straight glass of milk. And if I have a latte, a lot of people go oat milk now. But yogurt and cheese, everyone eats all the time. So it sounds like people aren't really eating dairy, but actually in like a milk fat level, which is how the dairy industry measures it, people are eating more dairy than ever before, and that's because of cheese.
Okay, you came here with numbers. In your article, you write that America's per capita cheese consumption has more than doubled since the government began keeping track of it. In 1975 to about 42 pounds a year, it's more than all the butter, ice cream, and yogurt combined. Facilities for making cheese account for more than half of the $8 billion in U.S. dairy projects slated to come online in the next, just in the next few years. That's according to the International Dairy Foods Association, Emily.
So I want to talk about if you know, like what kinds of cheese are kind of synonymous with American production. Do they discriminate, or do we produce all kinds of cheese? I'm a little hungry, so hopefully we can keep this very like food focused.
We actually do produce a lot of cheese, and this was interesting to me because I feel like American cheese gets a bad rep because you think of like the sliced cheese that isn't really cheese.
Yeah, the cheese product is what it is.
Correct.
That what they call it?
The cheese product.
Yeah, they can't call it cheese because it doesn't have the milk.
It doesn't have enough cheese. It's like blended with other things. But as it turns out, the U.S. is actually a net exporter of cheese. So we basically only import varieties that are like specialty cheeses that are like hard for us to replicate here. So we actually do end up exporting more than we ever import. So it really covers everything. It's like, it could be like a Wisconsin cheddar. There's also a lot of Mexican style cheeses now that are gaining a lot of traction, both in the U.S. and also for export to Mexico.
How are prices right now?
Prices have been weak for a while. Milk prices during the pandemic really slumped because people weren't in school. That was a really big one. Yeah, so dairy farmers have struggled for a couple years here to try to find a market for their milk. And so part of the added processing capacity is expected to help that. And now milk prices are a little bit better than they have been.
Would a dairy farmer rather sell their milk for cheese and yogurt or sell it for milk? Like, does it matter?
It is, so my understanding is that if you sell milk for fluid milk, you usually get a better price on that. But because most of the milk is going into dairy products, within that milk for dairy products, they look at like the actual content of the milk. So milk that has higher protein in it or higher fat in it will fetch more of a premium. And so it's really interesting because now that we have this shift to cheese, our milk like contains more fat than it ever has before on average.
So there's obviously a big demand for cheese in the U.S. Is there enough supply? Is the infrastructure able to kind of handle these hungry Americans?
Yeah, I mean, we are importing more than we ever have, which is really interesting. But I think broadly companies are ramping up demand because there is more need for it. And because they think the per capita consumption of like 42-ish pounds, but like countries like France are like well above 50. And so these companies are really putting this money in, hoping that someday we might be like France.
You know what I noticed about myself with drinking milk? As an adult, I basically stopped drinking milk. Because, you drink milk as a kid, right?
Yeah.
But then when we had kids, we started, the doctors tell you to get milk for your kids. I started drinking the whole milk for my kids.
It's so good.
It's so good. And now I don't care how old my kids get, even if they stop drinking milk, I'm going to keep drinking milk. So like I think that, I know this is anecdotal, but I think having kids makes people drink more milk.
I think that's probably true. Yeah. And I think it's also interesting because for a long time, skim milk was like the rage.
Yeah.
And now
I can't touch the stuff now.
Yeah, now I feel like there's a lot more whole milk, and then I hear people talking about like functional milks, and so people are talking about like, for example, milk that has like added protein in it, or like lactose-free milks. I think like the growth of milk is really in that now, which is also interesting.
There's a lot of protein. Like I will have a glass of milk after the gym, which horrifies some of my friends. They're like, "That's gross, a whole glass of milk," but I
mean, for
grew
cycling,
up on milk.
yeah,
so.
for cycling, like chocolate milk